War is happening everywhere, and our portfolios are getting nuked as collateral damage in the process. The question is, does it make sense to buy when there is blood in the streets? Let's have a look at some data most people are not considering. Yes, we are down today. We are also down this week. There are a few winners this month, but still the vast majority of altcoins went down. And interestingly enough, this is happening while the long-term fundamentals can give some hope. Have a look at this. This is the number of publicly traded companies that have Bitcoin on their balance sheet. There was not a single company in 2019, but now it's 151 companies. Explosive growth, especially recently. The flip side of that story is that all of those companies don't really hold a lot of Bitcoin yet. This is really a story that's forward-looking. So here are the most important Bitcoin treasury companies: Semler Scientific, Metaplanet, and XXY. And this is how much they are buying. It's barely noticeable on this chart. Once we add MicroStrategy to that picture, it looks very different. Really, it's still Michael Saylor that's dominating the narrative. MicroStrategy continues to purchase, and we've also got Bitcoin mining companies that don't sell their balances. But there's an effect that's even stronger than the Bitcoin treasury companies, than the accumulation by the miners, and that's the Bitcoin ETF. When we add that to the chart, we see massive growth. In the last 1.5 years, all those entities combined accumulated more than 1 million Bitcoin. So that's more than 5% of the entire Bitcoin supply. And again, what's interesting about this chart is how it's accelerating over time. And that's the number of Bitcoin. It's not the capital that's deployed in Bitcoin, it's the number of Bitcoin. So even though the price of Bitcoin went up massively in the last year, the pace at which Bitcoin got accumulated still went up. So the demand by those entities is growing faster than the Bitcoin price. Isn't that interesting? Here are the Bitcoin ETF holdings over time. And initially, the growth was somewhat stifled because Grayscale continued to sell off their Bitcoin, right? There used to be the Grayscale Bitcoin Trust. It was not an ETF, it was a trust. Then with the approval of the ETF, the trust got converted into an ETF. And so the very expensive trust with all of those management fees, where there was no real coupling with the Bitcoin price, that's now moving over to the ETFs. And so all of those cheaper vehicles are taking more and more market share, with the leader being BlackRock. BlackRock alone now has 650,000 Bitcoin, or 3.3% of the supply, roughly. If we annualize the supply absorption through the Bitcoin ETFs, we get at a purchasing rate of 2.5%. But again, since it's not just the ETFs, but also those Bitcoin treasury companies that are continuing to accumulate, we are looking at buying pressure of roughly 5% or so. So 5% every single year gets bought up by entities that don't intend to sell long term. And so this is where the big market shift has happened. In the past, a lot of Bitcoin's price determination happened through retail. So the retail investor just bought Bitcoin in order to ride the current momentum wave. Maybe Bitcoin has hit a new all-time high. All media talks about crypto. People jump on the train. Once the train loses steam and there aren't enough new people coming in, the current momentum turns around, and then the short-term investor simply sells. That's then what generates the bear market. But the people that are currently buying into Bitcoin, they don't care about those cycles, right? They just buy and hold independent of the price movements. It's just a long-term allocation in a broader basket. There's no intention of riding anything here. There's no intention of timing the market. And so when the people that are currently buying have no intention of selling, this should stabilize the price at sustainably higher levels. What we see over here is the number of Bitcoin addresses with at least one BTC. We had very constant growth up until 2018. This was when Bitcoin hit 20K. It was the start of a very severe bear market, right? We went from 20K to 3.5K. And during that bear market, the number of addresses with one Bitcoin did not grow. But then as the price was lower, we continued to see accumulation. Once the price was high, the accumulation stopped again. Once we depressed, the accumulation continued. And so the retail investor, right, those smaller wallets, it's just one BTC. They tend to become smarter and smarter. They tend to buy during a bear market and then just hold and potentially sell when prices are high. But again, The people that are currently buying don't try to time the market. And so even if the price doesn't instantly continue to rise, the Michael Saylors of this world are not going to get rid of their allocation. They simply just continue hodling through the bear market. So we've got this clear effect of accumulation by Wall Street and by the Bitcoin treasury companies. We've also got inflows into the stablecoin market. So people that speculate actively with crypto, they need stablecoins in order to go risk on and risk off. The number of those stablecoins goes up. In other words, people are depositing their fiat currency with a custodian like Tether or Circle, and then Circle issues those tokens, the equivalent number of tokens, on the blockchain. We can see that issuance directly live. It is shown in this chart. This is the stablecoin market cap of DAI, Tether, USDC, and BUSD. We can see how after the Terra Luna collapse, people rather tended to withdraw their crypto. That's then also when FTX went belly up. But since October of 2023, we see money flowing into the market again, and that is supporting prices, of course. Have a look at how this correlates to the Bitcoin price. It's not perfect in terms of finding the absolute bottom, because Bitcoin bottomed out at 16K, not at 27K, but still it gives us an overall direction. Currently the market is still expanding, and the nice thing about the stablecoin chart is simply how little volatility it has. We can very clearly see what's happening under the hood. But when there's all this money flowing into the space with the stablecoins and with the ETFs and the Bitcoin treasury companies, why do we even see sometimes those corrections? Why do we still sometimes see Bitcoin going down, say 20 or 30% from prior all-time highs? So I'm specifically referring to the drop from 73K down to 53K, or this drop from 95K down to 76K. Why do we see still those relatively large corrections? I think the answer is the long-term holders. When the long-term holders are distributing their Bitcoin, when they are taking profit, the current rally can take a breather. We have seen this in March of 2024. We've also seen this in November, December of 2024. Currently, the long-term holders are not selling. So again, another potential positive hint that at some point we will meet new all-time highs again. Now, the main data we looked at was Bitcoin related, right? There is Bitcoin treasury companies, not crypto treasury companies. And a lot of the money that flows into the market via the stablecoins will also end up in Bitcoin. And so it's not really a surprise that we see most altcoins still going down. This is the performance in the last year of smaller altcoins. So that's the alts at market rank 900 to 1000. But it's not that different to the other cohorts. We do have single altcoins that perform quite well, but overall, most altcoins are down for the year. And that's happening while Bitcoin itself went up by 60% in the last year. So really, the altcoins are clearly decoupling. Altcoins are mainly bought by small retail as a form of lottery ticket, right? The general returns aren't enough. We need to make a lot of return out of just a little bit of capital. That's the whole idea of retail, right? Retail want to get those thousands of % returns. But then in the vast majority of cases, this plan doesn't work out. And so the others' dominance continues to go down. So the altcoins as a fraction of all of crypto declines and declines. And I've been talking about this effect for quite a while on this channel. Thus, I was able to outperform just dollar cost averaging into Bitcoin. What we see over here is my personal portfolio performance in the last 4 years roughly. So the x-axis shows the months, and the gray line over here, this is what I would have gotten had I just dollar cost averaged into Bitcoin. But because I bet on falling prices of a lot of altcoins in the process, besides just buying Bitcoin, the outperformance compounded extremely nicely over time. We really don't have to overcomplicate everything. We don't have to try to pick the next 10x altcoin because it's not needed. If our time horizon is long enough and we just get into the market over the long term and we've got strategies that tend to outperform, then the compounding effect will take care of itself and we've got a nice steady increase of wealth instead of just those random luck shots. I'm basically flipping this chart around. Everything that's red becomes green, everything that green becomes red. And we want to do this with relative valuations so that even if Bitcoin suddenly doubles and triples in price, wise, our portfolio doesn't suffer, because the main thing that we are worried about is that the altcoin does worse than Bitcoin. We're not necessarily only betting on the altcoin doing bad in US dollars. Now, I've made several tutorial videos on this. I very much like using the Hyperliquid platform. If you don't use Hyperliquid yet, there is a link down in the video description. But if you want to learn more about how I set up my trades, what assets I choose, where I set stop losses, how I ensure not to take on too much risk so that we actually see this long-term compounding without suddenly getting crushed by the leverage, then feel free to check out Premium. It's down below. It's thebitcoinstrader.com. It's currently $125 US per month. Our community is making quite nice returns. Again, what matters is the long term. It's not just the individual trades, because those percentages of course look nice, but really it's about, do we compound our wealth long term? And if you're going through the tutorial videos and if you check out my trades, the likelihood is quite high that the fees really won't matter that much. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you in Premium. The link should be here on the right. It brings you directly to the page. Or see you next time on YouTube. Cheers.